the members of Elite Bankers Club, our senior mentors, and a special welcome to all the banking executives who are joining us for today's session only. And he brings a wealth of hands-on experience and strategic vision that is second to none. A gripping session today. And without further ado, I will now request.
Today's topic is life cycle of NPA. It starts from generating cash by procuring deposits, which becomes our raw material. And then we deploy. The industry trade cycle is also disturbed by so many things. Maybe the pile-up of stock manufactured. So all this way, our NPA cycle will disturb the main cycle of the bank. And if industry cycle is affected by any reason, it directly impacts the cycle of the banking. At the end of June, on 1st of July, they have published this financial stability report, in which they have highlighted, of course, the report covers a lot many other topics. But briefly, they have initially covered about the global economic scenario. Some existing player will go, some new players will come, some new partnerships will emerge in the world. So at the moment, the policy uncertainty and unpredictability of it will influence the global growth. To the Indian banking scenario, the Indian banking scene ability to lend to households and businesses as well as absorb losses in the event of downside risk. Heightened uncertainty could drag credit demand lower, which may impact asset quality and profitability. That is the caution again they have given, that the credit growth has slowed. That is the net NPA in the banking and the scheduled commercial banks is 0.5%, which is low in so many decades. So private banks and foreign banks were aggressive in write-off. Observation of or the study of the Reserve Bank of India. Now about retail lending portfolio also, as they have cautious about this sector. Even as the unsecured retail lending has moderated, it forms 25% of the retail loans. Though all these things are known to the esteemed members present here, but by not generating income and then additional expenses in the form of efforts to recover that advance, which should have come in the ordinary course of business, you have to put in an effort to get that money back. Where interest and or installment of principals remains overdue for a period of 90 days in respect of a term loan when the crop season ends. So it is linked to the crop season. It is 2 crop seasons for short duration crops and 1 crop season for the long duration crops. Then amount of liquidity facility remains outstanding for more than 90 days in respect of securitization transactions. When the securitization transactions have taken place, indicator of asset quality, high quality level indicate deterioration of asset quality and reflects on the financial health of the banks. We have seen that the balance sheet will not look good if there is a high rate of NPA, then asset quality has deteriorated, and ultimately it is giving indication that in the time to come, not only the interest will stop coming, which is giving trouble, so that they can caution the loan department to be cautious on those sectors or those borrowers or those regions. So this is also helping the credit risk management of the NPA in the banking sector. So from the various stakeholders' point of view, maintaining an appropriate credit administration, measurement and monitoring process and ensuring adequate control over the credit risk. These are the 4 principles which is laid down by the Basel Committee on the credit risk principles, based on which the regulator of the country, our country, in our case, is the Reserve Bank of India, that issues the guidelines. The classification norms are applicable if recovery is not there in 90 days at the time of restructuring, but it has to be recognized on accrual basis. If it is deferred by further 2 years, means 2 years plus 2 years, if it is due to the, which is beyond the control of the promoter, then this account can continue to be standard, and the income accrued on these loans can be recognized as the interest accrued on these accounts can be recognized as an income, because some amount of uncertainty would remain in the recovery. So to create a buffer for the, then the provisioning rate is 25 basis point. All other standard advances, the provisioning rate is 40%. We have seen that in case there is a deferment of account is NPA, and the bank has to start making provision for the probable loss, treated as a loan asset, then the whole amount has to be provided for a provision, sensitiveness to the credit risk department. So it starts right from the credit origination. Then there are early warning signals and special SMA accounts. So the credit origination plays a very important role in the NPA cycle. It means that he is borrowing more than what he is expected to borrow. Then sectoral stress, again, we can generate the reports from the system and know that which sector is performing and which sector is NPAs are rising. AI and machine learning based scoring we can get for the borrower and accounts and monitor that. Arvindji, I think, should I break for 5 minutes? It's after taking all these efforts, if still the account slips to NPA, then that stage is transition to NPA. Program that system to give us the desired reports. It can be delinquency tracking. System tracks the day past due per account based on the installment interest. If it is not due, that it will give us the delinquency tracking, early warning signals, escalate the potential stress well before the NPA status, or sometimes even well before the account is identified as SMA. The regulator also inspects the bank and they check the classification of accounts in case they feel that the accounts have not been properly classified by the system. Take very stern and very firm action for recovery of our dues. Then it is transferred to the credit. Bank has got a dedicated departments for monitoring. So it can be credit monitoring department, which will be monitoring the account, trying to find out a resolution in case of special mention account so that they can prevent it. So the key roles of the recovery department will be for follow-up, for resolution. We have got a robust system. We can generate various reports. Auto triggers in that some cases the account is slipping to NPA because of the non-compliance of certain conditions. Account is not reviewed in time. Then also it will be showing that the drawing power is 0. Account resolution for the account is made, whether you have to go for restructuring, whether you have to go for recovery, or you have to refer the account to IBC. A decision has to be, timely decision has to be taken for the resolution of that account. RBI has given a circular. Now it is forming part of the potential guidelines of RBI circular, which is revised every year. Date of commencement of commercial operation needs to be extended. Segregate it to the various geographies. We can make a committee that we had already discussed at the various region level, zonal level, or branch level, assign them some portfolio so that they can have almost about 9 years. It came in 2016. Now it is almost 9 years. So insolvency and bankruptcy can be. Then the RBI gives a guidelines for prudential treatment of restructured assets. The moment you restructure, it will become NPA, except in case that where it is the DCCO is extended. And then how that restructured accounts can be brought back, it is which is available to us as on date is SARFAESI. We can initiate for enforcement of the securities. Lok Adalat, particularly in case of small accounts, we can go for lok adalats. The reserve price has to be declared based on the value of the assets in our books. Number of banks are depending on the recovery agents, and they also have their own challenges and some issues crop up somewhere. So that also affects the reputation of the bank. But basically, these are the recovery tools which is available with us. Within that limitation, we need to initiate the prompt action so that based on the data and based on the analysis made by the department, so that corporate debtor himself, they can also go to the NCLT for initiation of insolvency. Litigations, if any, in the account within 330 days, but practically these timelines are, so the committee of creditors normally take all the decisions about running the resolution process, and that resolution plan is filed with the NCLT for approval and implementation of that plan. That is how the resolution takes place. And in case the CIRP fails,
you have taken us through the entire journey from the origination of account for their observations, and if they want to add something to the already made presentation. So I'll first invite Shri Kalia ji.
What one can do in 90 minutes is to present a bird's eye view of the whole concept. And I think starting right from the background global economic scenario, that is only because it is half yearly slippage ratio that is being commented upon by RBI in that standard asset at the beginning of the year, and what are the net accretion during. There's a equation between the two. Friends, just wanted to add that on 19th June of this year, RBI has come out with, so just thought I will just mention this also, because these guidelines are now revised and provisioning norms have been so revised that for every quarter of deferment that you do, and similarly 0.56 to 0.5% for per quarter for non-infrastructure deposits. That is, I think he could only do it in a period of 90 days. Virtually, he has left no aspect, including resolution, including IBC framework. Yes, he talked about CIRP process. There is also, as friends, all of you know, there is also a PIRP process that has been, introduced for taking care of small, mid, MSME sector. And I think he has dealt with in a very, very, simple manner, but there are very, very detailed guidelines in respect of that circular. I would urge everybody who is interested in this particular topic to go through those guidelines at their layer and player, and they would give a lot of insight as to how the whole concept of resolution of stress asset writing from SMA 0, SMA 1, SMA 2.
I would just like to supplement few thoughts. When you gave the percentage of write-off to the NPA and the gross NPA reducing the write-off amount, and somewhere in the presentation you also made a reference of technical write-off, prudential write-off. That the account which is prudentially written off is as good as a live account for them to recover, and any penny recovered straight away goes to the other income, because it is just the provision which gets reversed and added to the income. KYB, that is know your borrower, know your borrower's customer, KYBC. 90 दिन हो रहा है, कैसे भी करके जमा कर दो. I think the moment you are crossing 30 days, there should be root cause analysis. From the operation in the account itself, you can probably get some of the signals whether account is conducting well or not conducting well. So, I mean, these are the things which can be developed through a systemic approach, through a technology tools. The payment is made to a fake supplier or a weak supplier.
Yeah.
Thank you. Arvind, मैं थोड़ा निकलना चाहूँगा. I got some guests in the house. Huh? All the best to everybody. Thank you so much.
Yes.
Guidelines on project finance. Those are the major important changes made as far as the NPAs are concerned. And one more point in that context I want to add is about the provisioning also in respect of the standard assets. Unlike earlier 0.4%, now the project finances were divided into
Two categories.
construction phase and the operational phase. During the construction phase, it is 1% for all others, and also residential housing real estate. And as far as the commercial real estate is concerned, it is 1.25%. Though the scheduled commercial banks provisioning is about 76.5. 3.25 lakh crores in March 2015. I think recently only they said that Reserve Bank that there is no credit for the commercial banks. But in this room, I want to say what is the fact behind these figures. No doubt, banks are performing very well. That's why they could able to reduce by maintaining the balance sheet management, by adopting the balance sheet management, either by writing off or providing the provisions.
The percentage write-off during last 5 years has come down from 31% to 28%. So that is also showing the resilience of the banking system per se. That's
Points made by our senior mentors after that, I'm sure it must have ignited a lot many questions in your minds. So now it's your turn to ask your questions, and our mentors are there. Or use the raise hand function in your Zoom menu. And Setia sir, from my side, the linking of that trade cycle and NPA cycle was brilliant. For sharing your invaluable knowledge and time with us today. Having seen the quality of our webinars, I am sure they should now think of joining the club as a regular member so that they don't miss any of our webinars.